Welcome back, everyone. I'm happy to introduce the next panel after this very thorough and very interesting, especially for foreigners, I guess, discussion that has taken place before. We will be talking about the market perspective of this compliance infrastructure. So the market perspective will be moderated by the one and only Juan Ignacio Ibañez. He's running. How many kilometers have you made?
That was a quick run.
Thank you so much. And please welcome the panelists, Magnus Jones, Gani Uzbekov, Natalya Romenskaya, and Miguel Vaz.
Hello, hello. Okay, there we are. Well, thank you very much. Thank you to the P2P Financial Systems International Workshop for inviting us to be here. We are going to be discussing regulation, compliance, and as we heard just from the AIFC a moment ago, regulation, compliance is where most of the licensing applications fail. It's not the technology, right? So it's a really, really important topic that we're going to be trying to cover today. And we are bringing a different perspective. We just heard from the authorities, the supervisors. Now we're going to be hearing from the people in the trenches, working, building, not in an opposing, but in a complementary perspective. So we're going to start, of course, with a round of introductions. My name is Juan Ibañez. I'm the General Secretary of the MiCA Crypto Alliance. I think most of you might be familiar with MiCA, but just to remind you, or the few of you that might not know, MiCA is Markets in Crypto Assets, is the EU regulation for crypto that we just heard from MBK mentioned that there's similarities across jurisdictions in these regulations. And the Alliance is an organization to help projects comply, to help fill gaps with the regulation. With regulation, there's always gaps, and coordinated action in the face of those gaps by the market is quite important, and to raise the standard and simulate best practices when those gaps exist. With that, very pleased to be here, but the spotlight is for these wonderful panelists who I'm going to ask to introduce themselves. So maybe starting with Gani.
Hi, my name is Gani. I'm founder CEO of SilkPay, a fintech company. We have 2 licenses, one of them from Astana Financial Supervision Authority, and one we have license from National Bank of Kazakhstan, and we have company in Abu Dhabi Global Markets.
Hi, Miguel Vaz. I run a MiCA-regulated crypto custodian out of Germany. We were the second one from BaFin 5 years ago to get a crypto custody license. And we work mostly on the institutional side of business, doing depository functions on crypto assets for funds.
Hello, my name is Natalya Romenskaya. I run PayNexa, which is the issuer of stablecoin and organizing cross-border payments here. And we work within the National Bank regulatory sandbox. So I'm based in Almaty and Dubai, and I work with this market since 2022, just when it started in Kazakhstan.
Hi, my name is Magnus Jones. I'm based in Oslo in Norway. I do 3 things. I do consulting on everything from the DeFi players, the DAOs, the DEXs, the decentralized landscape on one side, to banks, central banks and governments on the other side. Board role positions, including Nordic Blockchain Association that I represent today, and also a startup on digital identity. Previous to that, I started EY, Ernst & Young's blockchain department in Norway in 2015, and has been working very broad in this landscape. Also part of the Metaverse expert group of Interpol, part of the counterterrorism group of Crypto for the United Nations, and also a crypto expert to the OEC.
Well, thank you very much. And as you can see, we have a blend of mixes. Some of the loudest and most important voices in Europe as well as in Kazakhstan. I mean, I've heard that if you work in Kazakhstan, you must have met Natalya at one point, same with Gani here. So I want to start by, I want to start with Miguel. Miguel, obviously, you just mentioned you're based from Germany. You are supervised by BaFin, but I'm sure you look at other jurisdictions as well. So we're going to start discussing some challenges and then also look at compliance as a competitive advantage. When you're looking into other jurisdictions, obviously there's a number of factors you take into account, some market-based, but I'm sure you'd look at the regulation, at the compliance risk. What factors do you take into account?
So if I look at it from a market perspective, compliance for me is like a synchronization engine. So there's nobody offering financial assets to investors that works alone. So a one-stop shop solution sounds good until you have to start working in the market. And then you have to know whether the partners that you have to work with or that you choose to work with also abide by the same rules. So for me, compliance is more or less something like the cost and safety of doing business. That's table stakes capabilities. And when I look at a regulation, we look mostly for certainty and for the cost, right? So is the regulation clear? Do we know what's coming to us? Do we know who the regulator is? How many licenses do I need in order to operate a business? Because digital assets tends to be overregulated because of a new form for an existing function. And so that's more or less the things that we look. So how do we estimate the cost of doing business there? And how certain are we of that estimate?
And let me follow up on that by asking actually something to Magnus. So Magnus, I'm sure you have your own opinions on this as well, but also you bring a Nordic perspective on this, and we're very interested in the jurisdictional comparison here. But are there any lessons? So Miguel just mentioned factors to take into account, cost, but sometimes, things are not all at present. There could be ticking bombs, there could be things that explode in the future. Is there anything that you think in Central Asia, based on your experience, we should be considering for the future, based on the Nordic experience?
Well, I think you mentioned it well, of certainty is one of the key things. And this is what is very relieving to hear from the first talks here also, that you at least have a framework, and also relating to coming from the tax side, that's also a key thing, that you have clarity on how to actually do the business from the operational side. Having said that, it's not only about, call it the framework per se, or the compliance frameworks in itself, it's also the rest of the infrastructure. If you look into, for example, Malta, as one example, who has been the crypto island, well, they said they welcome to the crypto island at the airport, but the Bank of Valletta, they were not particularly interested to give you a bank account. So it's also these things you need to take into consideration. If you want to build up, like it was mentioned here on stage, do you want to become a hub? You also need to ensure, do you have auditors, do you have accountants who is willing to take the assignments, but also do they actually have the knowledge in it? So I think that's one of the most important things, to ensure that also all parts of the ecosystem are aligned and that they actually have the knowledge. So like you mentioned, to put it into the perspective of the Nordics, I think what we see here or hear about the collaboration between financial authorities, central banks, etc., is also key. So as an anecdote from the Norwegian side, when you mentioned the MiCA, the Markets and Crypto Asset Regulation Framework, we got this one in Norway as well. We're not members of the EU, but we're members of the EEA, the European Economic Area. And in some manner, it's implemented into Norwegian law. And when the FSA had dedicated 2 persons, allegedly, to get that framework into Norwegian law, it was just 2 random persons who were elected and said, well, we can do translation from English to Norwegian and put it into law, but please don't bother us when we have to do the application processes. So what happened is that the Norwegian central bank called up me and said, Magnus, have you heard rumors about these 2 new persons from the FSA? It's like, yes. Do you know who they are? And that was more like, aren't you the central bank in a direct line to the FSA? No. So this is also down to one clear example of how important it is for the relevant stakeholders to actually have a dialogue and understand the landscape.
Yeah, and I think we just saw in the previous panel what that dialogue can look like, a good thing to aspire to. And I like that you mentioned the bank account issue, right? Often when we think about crypto regulation and the cost of doing business, we look at the crypto regulation in itself. But what about the crypto project just getting access to banking rails in itself? And on that note, we actually have an expert in the interface between crypto and banking. That's Natalya. I know you've been working at precisely this. I think you've also launched Kazakhstan's first crypto card, if I'm not wrong,
Actually, we made a lot. We made the first integration crypto exchange to bank. It was back in 2022, and also crypto cards, CBDC payment card, and a lot of other projects.
So, and to bring that more local perspective, obviously there must have been a lot of challenges being the first in doing many things. On the regulation side, what was the main thing you encountered?
Speaking about regulations first, I worked both with AIFC previously and currently within the National Bank sandbox regulator framework. And I can say that both have its pros and contras. I'd say that working currently with the National Bank, it's really good in terms of different decisions. They are super effective, super fast, and very valuable, actually. And it almost never happens in the world ever when National Bank is so friendly. But it was no like... I wouldn't say that it was always the case, but still, as for now, I'm super happy. But on the other side, working within this regulatory environment, you're working not in a spatial regulated zone, and you're not working in some safe space, such as DFC in Dubai or something else. You're working onshore, and the regulator deals with the real economy here. And actually all the rules which apply to other financial entities, they apply to you as well. For example, recently we were granted financial monitoring entity. I wouldn't say granted, designated maybe, but actually we faced all the problems which arises when you're becoming with the company with that status. So it's a tricky point.
Gani, you've also been working here a lot. I can give you this microphone. Oh, that one. And you work with stable coins a lot, in particular, right, as part of your business. Can you touch upon some of these challenges that you find?
Well, I would say the most important and critical factors for us is stability and predictability of the legislation. When we set up our company in 2019, we had, say, one set of the rule. And of course, when you're entering into the game with one set of the rule, and during the game you're getting, say, new set of the rule, is very hard, because basically for a startup like us, you're counting every single penny. And unfortunately, we witnessed several, I would say, cases when at least previous leadership of the regulator unexpectedly introduced some, say, new capital requirements, and instead of, for example, focusing on building new products, making customer happy, we spend a lot of time trying to find money just to address that new increase in capital requirements. For example, I don't want to sound like grumpy old man, but like in 20 years ago, at least, say, FSA and National Bank of Kazakhstan usually publish so-called financial markets development strategy for the next 3-5 years, where regulators outlined, I would say, the basic vision, what's gonna happen for those next 3-5 years. And based on that vision and outlook, players in financial markets actually planned accordingly. Unfortunately, right now, we don't have that kind of so-called concept and strategy, which actually would be very helpful for newcomers, for existing players. But with current leadership of the National Bank and AFSA, we have constant dialogues, and we see that kind of predictability, even though sometimes we see some changes maybe on a big, but on a marginal level. Yeah.
And obviously, we have at least two people here. Oh, Miguel, do you want to add some? Oh. we have people here that have been working on stablecoins in particular, and we know stablecoins are a very special regulatory object, because they are generally multi-jurisdictional. They go around the world as part of their value proposition, really. So it's hard to really pin them down to a national regime, and the national regime needs to account for that. Now, we just heard in the previous panel that in the case of Kazakhstan, there's a two-tier system, probably, with the local stablecoin and the global stablecoins. How do you find that Kazakhstan. Maybe Gani, you one more time. Natalya, feel free to comment as well. How do you see this Kazakhstan regime adapting to that global nature and the challenges that everybody has really with stablecoins?
Well, I doubt that our regulator will accept so-called global stablecoin as long as they don't have so-called sovereignty rights over that global stablecoin. Because all those blockchains are independent from our financial regulator, so I don't see how a regulator will be able to control global stablecoin, even though they can control through the financial players, as usually a financial regulator does. So I would say that maybe so-called local stablecoins will grow and develop, and at the same time, I would say global stablecoin is basically is right now as a new concept where I would say a lot of people putting their assets just to address volatility of their local currency, try to save money and be more flexible across the globe. So it's very hard to see how our regulator, especially National Bank, will be able to control global stablecoin, but through financial rails, I see that there is a way how to at least not explicitly but implicitly control and be able to have hands on that.
I mean, that's definitely one of the most important rails for that regulation, right? If we look at the European experience, we are regulating not really the stablecoin in itself, but the act of offering it or the admission of the stablecoin in a service provider, really. I mean, I'm not sure if Natalya, you wanted to comment on stablecoins, but also I have something else for you. Which
Actually,
is,
I have something to say on stablecoins.
Please go ahead.
Because you cannot issue a stablecoin backed by dollars if you work with National Bank, because actually those stablecoins they are currently into, they are all backed by tenge. And even if tenge is volatile currency, it still has a great yield currently. So the official rate is 18%, and you can earn a lot. In terms of regulation and in terms of control of the National Bank, they are pretty much doing well in that sphere, because when you issue a stablecoin, you're always cooperating with the bank. And any bank in Kazakhstan is very cautious to do anything wrong. So all the process on first, they are monitored by the National Bank, and secondly, they are monitored by any other bank you decide to work with. And for example, the way you treat your reserve is also regulated here. So you cannot just, I don't know, take that reserve and spend it wherever you want. I mean, to buy some bond you decide reliable or something like that. So you have to understand that all the process will be aligned with the decision of National Bank.
Just to comment further on the stablecoin issue, just to say how can you deal with it actually from a national point of view of the international one, the global ones. That's actually fairly easy. You don't need to make a regulation to ban them. Forget about it. You don't need to shut down the internet. Again, it's just back to tax and accounting. Because if you're a business, you're an entity, you're dealing with them, you just put them into accounting laws that's saying, well, these asset classes are now prohibited or allowed there. That's a very easy amendment to do. That's how we deal with them from the accounting perspective. So that's the first step. So it's not difficult to handle them. Then we need to wake up and understand. We see a huge hype and euphoria surrounding stablecoins today. It's all over. But in practice, it's very little retail adoption. Like it was mentioned here in the opening. Wholesale retail, wholesale focus. The Norwegian Central Bank, they had a launch of a survey, a brand new adoption survey last week. 97% of all Norwegians had heard about crypto. But only 30%, i.e. 70% of the ones who said, I've heard about it, said, I have little to no knowledge on this area. Among the ones who had heard about crypto, it was only 19% who had heard about the stablecoin. Among those 90% again, it was only 28% who had ever dealt with the stablecoin. So stablecoins from the consumer level is not a problem per se. That's why I believe it's much better to build up a strategy towards what it's doing here, of having an overview of the whole landscape. Because regardless of how we twist and bend on these things, I believe we need to wake up and see, for example, in the EU, in Europe, we are looking into making euro stablecoins. We have a consortium called Kivalis. We have the European Central Bank, who is planning to issue a digital euro. But in practice, how is it being used and dealt with today? Mainly by crypto people and bots. That's the main usage area. But in practice, it's actually the shipping companies, the liners, the European shipping companies, who pays their crew with stablecoins. And they are not interested in any bloody European issued stablecoin. They want Tether, because they have liquidity regardless of where they come from in the world. So then the crew are paid by Tether. That's for security purposes, efficiency purposes, and operational purposes. That is very well operational functioning for that liner company. And you can just imagine if the CEO of any liner company comes and talks to any politicians, they will just say, please leave this Tether aside because of security, efficiency, and cost saving. So I think we need to wake up and see where do we commence the business, and that it was also mentioned previous here today, that we need to see it from the more global perspective, and also, I believe, imagine a world that doesn't exist yet. We're just at the start, and to finish my mantra surrounding, call it the accounting and the boring side of things, we're talking about compliance there, so we're allowed to be boring. That's down to how many ERP vendors, the enterprise research planning systems, can deal with stablecoins today. If we're talking business operation, wholesale operation, there's currently only one, that's SAP. Microsoft haven't even started to look into it. So this is where we need to wake up and be realistic towards that we are at year 0 to 1 when it comes to stablecoin in a 10-year perspective, in my view. And this is where I think it makes much more sense to, like, say, focus on both sides of these things, because it will be two totally different use cases, wholesale versus retail.
And before I keep asking more questions, feel free to interrupt. I think this is taking some momentum right now, so any comments, please guys do. And on topics that are supposed to be boring but actually can be quite interesting, let's talk about areas of stablecoin regulation for a second. Natalya, you mentioned, of course, the most important one, which is the issuance regulation, right? Everything from the reserves, the authorization to the redemption. Magnus also alludes to other parts, but that's not the only part. Magnus mentions the crypto asset service providers, really, and when and which stablecoins are allowed to list. But stablecoins don't end at the issuance level. Then there's the distribution. Then there's the transaction monitoring, right? And for that, I'm going to turn to Miguel, who I think you, as being involved in the service provider side of things, you may need to be involved with the trade surveillance, transaction monitoring. What I see is that those requirements are increasing. These are not stablecoin specific, but they are falling more and more on the service provider. What do you think the right balance is for those requirements? And yeah.
Big question. So I think the issue with the stablecoins is a different issue than you have with the other crypto assets, which we call here unsecured crypto assets or digital assets. And I think we can draw a lot of the measure and a lot of the guidelines for compliance from the existing system, because in the end it's money. So it's fulfilling one function, and it's the same function whether it's commercial bank money or a stablecoin. So I work from within a bank, and so I already have a compliance framework for that, where we do monitoring of transaction, where we pick the transactions that we need in order to eventually file and say, well, hey, there's a doubt here or there's a problem. And so I think we can borrow a lot from the existing system. I think the concern from the compliance departments is that the amount of transactions is going to go up, and so the existing systems won't cope with it. So, and I think that's more or less the challenge that also from the regulatory side and also from the central bank side, for example, is that the non-functionals of moving money around could change completely with stablecoins. What's the right balance? I think the right balance is making sure that we reuse and then we don't reinvent the wheel. It's money that's being moved around, and I think that's the goal post that we should focus on.
Can you elaborate on what you mean that the existing systems are not prepared to handle increased volume? Like specifically what that looks like?
So I think one thing changes with the digital assets is that you hold the asset directly in a wallet instead of going through an account. And so what used to be an operation that was between accounts, so you instruct your service provider to do something, is now something that resembles a peer-to-peer. And so when we're talking about digital transactions, we tend to think of one transaction, and we deal with that object. So I want to deal with that transaction, I want to process it as soon as possible. If I look in the traditional rails, I am dealing with instructions that are bundled and processed maybe end of the day, maybe during the night. And so that's a completely different way of looking into how they're processed, right? And so whenever I have an increase maybe of 5 to 10x of those transactions, maybe I will not be able to process them on time. So I think that's where the concern on the systems side are, and where the guys from compliance get very nervous because they say, I don't have the manpower, I need 5 extra people.
Right, so what you're saying is the intraday trading combined with the volume.
Yes.
Right.
Yeah.
Very, very, very interesting. Let me ask something to the entire panel. Really, let me bring the topic of the panel really to the discussion. Compliance is a competitive advantage, right? I mean, we've all dealt with regulation, and regulation is, of course, a box we need to tick from the builder perspective, right? But sometimes it's also a selling point. Now, is this true? Is I am compliant a selling point? Do we have customers buying our products because of how compliant we are, or is that a pure cost? I don't know, Gani, if from your experience, for instance, do you acquire customers due to a regulatory edge, or is the regulatory dimension in a completely different box for you?
Well, if I understood your question correctly, is basically which compliance we, I would say, consider the highest in terms of priority? That's what you're saying? Well, basically, like since we have license from AFSA and from National Bank, for us, those two regulators are one of the highest priority. But at the same time, since we provide service across the globe, we see, I would say, difference in terms of regulation. And we always try to raise those kind of momentum with our regulators. For example, one of the example might be that 10 years ago we talked to the National Bank about e-money payment regulation in EU. And at that time, when we, for example, set our company in 2019, as a company from traditional regulation, we didn't have any rights to talk to MasterCard or Visa because we didn't have any membership rights to so-called Kazakhstani interbanking settlement center because it's only rights for the bank. So it took almost 10 years, and right now, National Bank is introducing those amendments to the existing law, but for the last 10 years, we don't know, say, how many companies didn't survive, how many maybe excellent, brilliant ideas didn't show up because of that kind of regulation. So sometimes we're successful, sometimes we are not, but that kind of, I would say, I wouldn't say struggle or fight, but basically constant dialogue we have with our regulator. But coming back to Astana Financial Supervision Agency, authority, actually you have, I would say, another, I wouldn't say extreme example, but at least you have another jurisdiction where you can test and introduce a lot of products, and thanks to AFSA, actually, we survived, and we're a MasterCard principal member, we have in-house payment processor, and we have strategic partnership with Circle, we can do settlement with them in USDC, etc., etc. Those kind of privileges we would never had with regulator, even though we understand that National Bank, they have completely different authority, obligation, and the rights. Yeah.
Right. So it's interesting to see how the fact that you are regulated, you have the licenses, allows you to be a counterparty to a number of entities that otherwise would just not be able to have you as a counterparty to begin with. But at the same time, like Magnus is mentioning, right, there's a USDT, USDC story. USDC has a selling point, right? Like you should use us because we are regulated. And Magnus is also bringing that other perspective that that's not the end of the story, right? So we need to strike that balance as well. Miguel, in your case, well, I mean, of course, you as a bank, you can only operate with regulated counterparties. Do you think this is then something exclusive from the B2B, B2B2C environment, or do the consumers also care about the regulation side?
I think consumers care about the quality of the product, and the quality of the product will usually be higher if it's coming from a regulated entity, right? And usually consumers get their product from banks, right? So that's your distribution network. That's where you start filtering. So I think they do care. Sometimes they do care about getting rich fast. So that's why you have a lot of adoption in crypto as well. And they don't care where it's coming from because it's a low-cost opportunity of maybe changing your future. But if you're talking about, for example, investment products such as funds, then you do want them to come from somewhere where there's somebody looking at the details so that they don't have to. So I would say yes, definitely a competitive advantage. Yeah.
Okay. And following up on something that Gani just mentioned, but I want to address this to Natalya. So Natalya, I mean, you've been working at the interface of banks and exchanges, banks and crypto. That's super interesting. There's so much to unpack there. Now that we have this booming regulatory regime in Kazakhstan with the various agencies, how does that factor in the bank's counterparty selection process? Like, obviously, banks will have counterparties in Kazakhstan. They may have historically some counterparties offshore, right? Is that a problem now? Is that an opportunity? How do you see that?
Yeah, actually, if you are regulated under the national bank regulatory sandbox, or maybe under other laws, I mean the regular law, you have to choose only an onshore bank. So there are not many in Kazakhstan. And I wouldn't say that the situation that there is a crypto project and those crypto projects just choose which bank they are ready to go with. It's always kind of, if you are lucky enough for any bank to work with you. So in that case, working with banks is always tricky because you actually are dependent on everything. In my experience, I even had, I wouldn't say problems, but some very long-lasting questions with the accounting division within a bank. And actually they stopped a project for, I guess it lasted about 3 months, just for accounting reasons, because they had a lot of questions on settlement, etc. It was some time ago, but still you have to negotiate with almost every division. And then if you are lucky enough and you have a bank to cooperate with, after that you have to meet all the teams starting from compliance, which actually currently become the I wouldn't say the easiest part, but it became easier because a lot of compliant knowledge came to Kazakhstan. They have a lot of trainings, and actually it's not the first year in crypto for Kazakhstan as well. But after compliance, you're going to meet your currency control team, the FX team. FX team are the nicest guys because those guys are going to earn on your crypto, so they are usually the most friendly. And all the other stuff, including those accountants and everything. So I would say that yes, you have to choose among onshore banks only, and yes, you are lucky if you have one.
Magnus, is that the same in the Nordics? Anything that you can anticipate for this part of the world?
You know, I think it's important here to understand why is it a challenge for the bank. And it's a challenge for the bank like any authorities or players in this landscape, because it's an unknown territorium. We have to be honest and say, you know, it's the crypto is not one thing. And I would just like to jump back to here also, what I see as very, very, very important. That's when we talk about stable coins here. That's the same level that we talked about some years ago, CBDCs, central bank digital currencies. We didn't even go one level down to separate them wholesale and retail. Stable coins is not one thing. Are we talking about fiat-backed, pure fiat-backed? Are we talking about asset-backed, gold, silver? Are we talking about a hybrid between them? Are we talking about crypto-backed? Are we talking about a synthetic crypto or even hybrid? We can separate them on 5, 6 different high-level and even further subcategories. This is where things makes it difficult for the banks when they don't have the knowledge, because you think, oh, it's a stable coin, so then it's fiat, so let's accept it. It's down to this kind of level, and this is when I have never, when I was with EY, I had never ever been refused one client to get a bank account. How did I deal with it? It's fairly simple. It's about compliance. It's about understanding their risk level. So I always told my clients, buy 1 hour from me at EY, a Big Four company. That's risk diversification for the bank officer, because then EY has done a KYC on the client. So they say, and I know you, Magnus. So if there's something about this person coming in, regardless of that's a Norwegian or a Kazakhstanian coming into Norway trying to get a bank account, they will always say, I can get hold of you if there's something. Then I always go to the tax authorities. Not again tax authorities. Yes, I go to them to showcase the case. So you can go to them, show the inside of the jacket, say we go in this direction, but it might be this direction or that direction. Then after that, we go to the FSA and we do the same. We inform authorities up front. So then, one, you will never be able to get additional taxes and fees because you have already informed the authorities. The FSA is also informed, and if you put into the list EY or any Big Four, FSA, tax administration, and the largest bank in Norway, and then you go to the accountant or your auditor and say, hey, we actually need someone to look into it, it's a much higher likely probability that they will actually accept that one compared to coming in with a big cowboy hat that is pinked or a Kazakhstan hat and say, hey, I would like a bank account in Norway. That's not going to happen. So I think it's about understanding the complexity level of the persons you're talking to. And if you break that one down to which level of complexity, it's much easier to get it through the system. So it's all about, call it understanding, and to just end up on a point where banks, or many banks, including the Norwegian Nordic ones, like you mentioned clearly, are not understanding. I've had a customer, a CEO of a company, he got paid in Ethereum. You could trace this one. You could use, for example, Global Ledger, Chainalysis, TRM, others, to trace it. And it's a public information that the largest bank in Norway, DNB, they use Chainalysis. So when I brought this CEO in, I asked them, do you want us to use Chainalysis and provide you the data? But that really doesn't make sense because you are using it. And I can see that a private banking officer was totally blank. What do you mean? No, I'm just saying, if I provide you and do analysis using Chainalysis and you do the same, we get the same input and the same output. But if I use Elliptic, for example, we might see some differences. That might be good for you. And you can see he was totally black. And he ended up saying, no, I think it's much more convenient that you use the same thing. And then I tried to say to him, like we say in Norwegian, well, then you get shit in, shit out in some matter. You get the same data. There's no proof. Oh, as long as EY has put their name on it and there's someone who has done this one, that counts as a second opinion anyway. So we are at that kind of level. So that's why we need to raise, call it, all these levels, break things down, and understand how the real world are thinking. That's how I believe we can scale things together.
This really speaks to the importance of dialogue. Gani, do you want to add something to that?
Yeah, I just coming back to your question, like our example, when we compared how much time we spent to get all those licenses, it actually took us almost 4 years, being as a traditional licensee from the National Bank of Kazakhstan. If we would have compared it with the EU regulation, it would have taken only maybe 6 months, and the cost is much less. So that's basically, I would say, I wouldn't say regulatory arbitrage, but of course, that's kind of situation we have, and that's why, for example, maybe EU market is more mature, developed. You can test hypothesis, you can close company, you can do a lot of stuff. Here, cost is very high, and that's why we don't see a lot of maybe fintech companies around payment transfers, because at the end, our compliance and regulation is biased toward bank until recently. So we do hope with those draft law, which we hope will be approved by the end of this year, at least will give, I would say, fresh blood to the industry.
Well, to paint a slightly dimmer picture, unfortunately. I mean, you're right. For instance, Magnus, you were talking about Malta before, right? Malta had a very well-greased system for the transition of the pre-MiCA to post-MiCA regime. So the applications were processed really quickly on that front. But you see application queues right now in the EU, there's some significant delays. And actually, in less than a month, we have a very important deadline with lots of companies might lose access to the EU market. So
I meant fiat companies. I meant, for example, regulation in Lithuania. It's very easy, pretty straightforward. Capital requirements is very less. For example, in order to open e-money company here, you need to have at least $500,000. In EU, full license of e-money company costs only 350,000 euros. In order to open bank, here you need to have at least 20 million. In Lithuania, in order to open specialized digital bank, you need only 1 million euro. So you see the big difference.
Yeah, significant difference once you get into the numbers, no doubt. Well, and that all of this also speaks to the importance of dialogue. What you were mentioning, Magnus, is another side that often we forget. Us as an industry being proactive in approaching the regulators. Natalya was mentioning also the openness of the regulators to open their doors, right, and receive the dialogue. That's what we heard in the previous panel also from the IFC, how they ask questions to the projects, and we need to be ready to answer them. Well, we can also bring the information to them, and hopefully that saves a bit of time and energy. As we are becoming a bit tight on time, I want to ask if the audience would have any questions for our panelists. We've covered topics of regulation, competitiveness, compliance, stablecoins. Any takers? Well, in that case, thank you very much, because we are going to end right on time, not on the time on the screen, but the time that we've been told. So that's excellent. Thank you so much for a very insightful panel. It's been a pleasure. And yeah, let's hear from the next panel.